Welcome to this Premier Training revision video that takes a look at the trial balance. As we've already learnt, the double entry system of recording transactions means that every time that we record an entry on one side of the general ledger, say the debit side, we must record one or more entries of equal value on the other side of the ledger, the credit side. It must therefore be true that in any set of accounts, the total of all the debits should match the total of all the credits. However, we need a method of checking that this is indeed the case, and this is the purpose of the trial balance. Put simply, a trial balance is just a list of every account balance in the general ledger. The total of all the debits should match the total of all the credits. There are no rules as to the order in which the accounts are listed, but they're often in alphabetical order. Let's start with sales. You should know by now that sales are always credits, and so the balance brought down on the sales account will always be a credit too. Sales returns are the opposite of sales, so this account must always have a debit balance. Purchases are always debits, and the purchases returns account must therefore have a credit balance. The payables ledger control account shows how much we owe to our suppliers. You might see this account referred to as the purchases ledger control account, or maybe even trade creditors or suppliers. As this account keeps a record of a liability the business owes, it will always have a credit balance. The receivables ledger control account shows what we are owed by our credit customers, and you might also see this account referred to as the sales ledger control account, or maybe even trade debtors or customers. This account is considered an asset as it's money the business has already earned and will see in the near future, and therefore it will always have a large debit balance. Electricity and rent are both expenses, and so both will have a debit balance. The wages you pay your staff is also an expense, and so this account will have a debit balance. And your vehicles are a business asset, and assets are always debits. If you take out a loan, you'll eventually need to pay it back, so the balance on the loan account must be a liability, and therefore a credit. Inventory is the stock of goods you keep ready to sell. This is another business asset, and as we know, assets are debits. Capital is the amount of money the owner has invested in the business. If the business ends, then this money will be owed back to the owner, and so capital is a liability, and liabilities are credits. Owners of businesses don't get wages, and instead they take drawings. Any money the owner takes in drawings will come from capital and will reduce the amount of capital in the business. Therefore, the drawings account will always have a debit balance. Next, we'll look at discounts allowed and discounts received, and you need to be careful with the balances on these two accounts as many students get them the wrong way round. Allowing customers to take discounts comes at a cost to the business, and costs and expenses are debit entries, and therefore the discounts allowed account will have a debit balance. On the other hand, discounts received are the discounts that your suppliers allow you to take. This is the opposite of a discount allowed, and therefore the discounts received account must have a credit balance. Finally, there are those accounts which can have either a debit or a credit balance. The first of these is the VAT account. If you've made more sales than purchases, then this account will have a credit balance, which represents a liability that we owe to HMRC. However, you can reclaim any VAT that you've paid on capital items as well as paid on any other purchases or expenses, and so there are occasions where you might have spent more on goods than you will have made in sales. If this is the case, the VAT account will have a debit balance, as shown here. The other common account which can have either a debit or a credit balance is the bank or cash book. If you have money in the bank, then this is an asset, and this will appear as a debit balance. But if you're using an overdraft, then this is a liability and will appear as a credit balance, as it does here. Once we've entered all the accounts, then there's the all-important task of checking it all balances. First, we need to add up all the debit balances and enter this figure at the bottom. But don't be tempted just to put the same figure at the bottom of the credit without checking it first. If it doesn't balance, then there's an error which we'll need dealing with. Here, the debits and the credits balance. And you'll learn what to do if they don't in the next unit. Try to learn as many of these accounts as you can, as a trial balance will come up in your assessment. And don't forget to look at our other videos, which will also help you learn which accounts are usually debits and which are usually credits. I hope you found this video helpful, and thanks for watching.